guys? So Tommy here. I'm going to be breaking down some of the trades that we took today. I'm going to be going over why we took certain buys. There was kind of a lot of scalping trades that you'll see that, quite fast to kind of get in. So I'm going to be breaking down Gbpjpy in this video, and then I'll do some other videos for the gold trade and some of the other signals that I've called today. So pretty much with the Gbpjpy trade, I waited for a reaction at this kind of order block here, or this level of demand. When we seen this reject here, so this rejected 30th of March around 4 o'clock. So for me is around Asian session. We're not being taking any trades there. But what we can see is the market's tapped into this order block here, right? Why is it an order block? Because you can see we have this bullish candlestick pattern. The down candle here left behind an imbalance, right? Markets came to tap in, and then we seen the reaction. So what I did, I waited for London session, right? And then I started to mark out my charts. The way I did this was, I seen the reaction here, and I seen the markets forming a level here where sellers were going to come in, right? There was sellers coming into the market here, but what we seen, and if we grab out a round number indicator right here, left behind the zone, and what it did, the markets really nicely rejected 159,500, right? So what that's telling me with this strong rejection is the markets want to go higher, right? The markets want to go higher, and they want to break above this liquidity area here, right? Because what you had in the markets at around 7 o'clock, so kind of the start of London, was sellers coming in, putting stop losses above all of these highs. So you'd have stop losses above here, again, stop losses above here, right? So for me, this was a target area. I was looking to target above this zone, and I wanted to see the market take out all of this liquidity above, right? So what we can see is we have the liquidity above. We have the rejection here from 159,500. This is where I wanted us to kind of get in, but I could not get an entry there for us. The markets moved too fast, okay? It was too fast for us to get an entry. Let's take a little look on the 1 minute, see what we got. So we do have a little order block or area here. Markets tap in, right? What that did is we started to see breaks in market structure, right? If we're looking at the 1 minute time frame, we can see that we have a BOS right here. Market pushes up into the zone, pulls back around about our entry area. So what we did after we had this little kind of interaction here, we entered at I believe it was 722, so around here. Stop loss down at the 300 zone, just to be safe, just to give us enough room if the market is to tap into that 159,500 level, potentially spike underneath, we were going to be safe. Okay, so this was our first entry. This is the first entry right here. Again, really good trade. Couldn't have asked for it to kind of go better. We took a little tiny bit of drawdown. Markets did push higher. Okay, so what we did for the second entry, because we did have two entries, is we can see that as the market broke above this level here, this created a break in market structure, right? So we have a high that formed this low. We can see then we have a higher high. So if we draw out the market structure, we have this high, we have this low, we have a higher high right here. What I was anticipating then is you're going to have the break and retest traders here looking to take longs right here, right? With the stop loss underneath. So the stop loss was going in about 159.900 for the break and retest traders. For us, what we like or what we do is trade order blocks, right? So we have an order block right here. As you can see, you have clear market structure. Market pushes up, makes a high, makes a higher low, higher high. I was anticipating, because that's what all we can do, is the market to make a higher low, ready for a higher high, right? So this is where we had our entry in. Our entry came in at the round number, right? Just simply because I didn't want the market to just tap it and not give us a little entry. So right here was our second entry at 160, right? Stop loss went just underneath that zone, just in case markets wanted to dip a little bit lower. A little bit of a bigger stop loss, right? But nonetheless, the trade worked out perfectly and still running right now. So this trade hit around 112 pips, so a decent profit there, and this trade, so the max that hit is about 1.42, right? So two perfect trades. If we're looking at market structure, right, we used kind of the London session, we've seen the spike down into that level of demand, and we can see in terms of market structure, we have clear bullish market structure, right? Markets are forming higher highs, right? So we have a high right here, right? So we have a high, okay? So we have our higher low right here, right? So higher low. Then we have our new higher low right. Let's move this one here. Again, we have our higher low here. So this is what we were anticipating, the higher low. Remember, you can only anticipate. And then we have a higher high, right? Clear market structure. Even if you wanted to grab a fib out on this and fib from here to here, market perfectly taps into the 0.62. We have a 15-minute order block. Everything was lining up for this trade to work out perfectly. We did not need a big stop loss like that. We could have probably shrunk the stop loss underneath the order block, giving us around a 3.3 risk reward. But as we know, kind of with trading at the minute, it is riskier, right? It's a riskier kind of time to trade, just due to kind of all the conflict with Russia, and you know, your interest rates coming out and so on and so forth. So I am using a little bit of a bigger stop loss, right? So as we can see perfectly, we have this level here of demand or order block, whatever you want to call it. So you have a level of demand right here. Markets reacted to this level of demand, giving us this bullish move up, right? If you want to look at the kind of the 1 hour too, this is also why I could see the markets pushing up, okay? So if we wipe all this off, even if we are looking for bullish or bearish, we had, in terms of bearish scenarios, a BOS right here, right? So if we look at it on the 1 hour, what the markets have done, it's left behind this bearish order block right here, right? So what we've done is we've had a low, a high, a lower low. Now we need to form that lower high if we are going to push down lower, right? Which I do think we are. I do think that as soon as we hit around 161, this is where the final TP is. The markets may give us a sell setup. This is what we'll be looking for. Is pretty much something very similar to this on the lower time frames, ready to push down, right? But this whole move up here needed to happen. So what we did, we just took advantage of looking at multiple time frames, 4 hour, 2 hour, 30-minute, 15, even going down to the 5, and we were able to catch this buy setup going up. So just to clarify, it was a combination of looking at the liquidity. So we had a clear liquidity above. Then it formed a break-in market structure for the second entry, right? You could have used probably a fib level from here to here, very, very close to the 0.62, right? So for this entry, if you're using 50%, which I don't recommend, but we did come underneath the 50%, which if you're looking in terms of buy setups, anything underneath the 50% is classed as your kind of buy-in zone, right, for bullish scenarios, okay? So very, very clean, very, very clean, right? So definitely a decent day for Gbpjpy. That is going to be the breakdown for Gbpjpy. Now we're going to move on to gold, right? So I'm going to show you why we took these gold trades, why why I sent the signals for buy, and so on and so forth. Okay, so what we're going to do is start off pretty much on the 4 hour, right? So this is where the bias for this first trade comes in, that hit about 420 pips. Okay, so it's very, very nice. If we're looking at this, and we're looking at in terms of order blocks and so on and so forth, we're going to take a look at the 2 hour time frame, right? When the market pushed up from this zone, what it did, it tapped in and pushed away from it, right? So looking at the 2 hour time frame, the order block was tapped. If we look at lower time frames, okay, so lower time frame order blocks and so on and so forth, so I believe it was 15-minute potentially, we have an area that needed to be tapped right here, right? So a level of supply was not tapped here, right? Market came in, stretched lower. This is where we entered right here when I started to see the market, stalling. Okay, so we entered right here. We did take some drawdown, and eventually what we did was break underneath this order block. So this order block became invalid, right? And this is why, it became a riskier trade. We had to move the stop loss from 1890 to 1885 just to give it a little bit more room, because looking on the higher time frames, whether we are bullish or bearish, as the market broke this low, right, it needed to pull back up. It needed to correct this whole move down from here to here. So the move back up to the 0.62, even to the 0.785 needed to happen, right? So it needed to pull back up. I do think that this could have been a kind of stop loss hunt, this move here. This was just to take out any buyers from this zone. I do think that it could potentially even break these highs here, right? There's a lot of zones higher up. So that was that kind of trade. It was based off of this level of demand or order block. It did break it, so it's a good chance that we may even continue lower, right? So this is why as we start to buy more higher up now, it's going to get riskier and riskier. Okay, so what I want to go over is today's trade and kind of break down why we took today's trade, right? So what I'm going to do is remove all of this. I'll pull this across, and I'm going to show you in terms of you know, kind of smart money concept, why we took the trade. So what we can see is we have a clear BOS here, right? So that we had a break in market structure, right? This zone left behind an order block right here. I believe on this chart, just because of the broker I'm using, it's not actually marking out the order block, but there's an order block right here, right? It came in at around 1916. So once I seen the reaction here, and we can even drag out a fib, so people like to use a fib, it comes in around our 0.785 Fibonacci zone, right? So we can take all these other ones off right here, and we'll even take the 50% off. We don't need that. What we can see is we have a break in market structure. So you should all know the pattern. We have a high, market makes a low, higher high, we anticipate a higher low for a higher high, right? So we can see it's the same pattern over and over again. Look in the educational channel, you'll see, right? So what we had was the market pushed up. We had about London open or around kind of London session at around 7:15, the market sold off, right? As we came into around 10:15, so it's London time, decent volume coming in at this time, we started to see the market tapping into this zone, right? This is where I took the buy setup. This is where I looked for the buys. Let me just get the exact entry for you all, just so you can kind of watch this video back if you need to. So the exact entry for this was 1918. So let's go back to the 15-minute time frame. So 1918, right? So we have 1918 right here. So literally the start of this order block, and then we had our stops at 1914, which is just, well, I say just under, but a decent enough level underneath this zone here, right? So what we've had is a 200 pip move up, coming close to 5%. Our TP was at 28, just to kind of match these highs. I did want to set a higher TP, so I did mean to call out a higher TP, as we were expecting the market to make a higher high, meaning that the TP would have needed to be higher than this, right? So in terms of this trade, we have the pattern, we have the high, we have the break in market structure, the order block, and then the push up, right? So really, really nice trade using the high kind of volume times. You know, 7 o'clock, it started London open, then we have the 8:30, the 9 o'clock, the 10 and the 10:30, all around these areas, you start to see the volume coming in, right? So we can say for this trade, we have the simple buy setup, breaking market structure, order block, using the fib level to match up with our entry. This is why we took the buy setup on gold, right? And what we've done, we've used the higher time frame analysis also, right, that we've been doing, and saying to ourselves, this pullback needs to happen. So this move from, let me mark it out, from here to here, that broke underneath this low. If this is one move down, the markets will need to pull back up to correct itself, right? We can see this little order block right here too, right? Markets, I do believe, are coming into this zone. So around 1953, 1950, this is where I believe the markets are going to go. So any long setup I see into that zone, I do find it pretty valid. Obviously, the higher we're up now at about 1938, I do believe it's a little bit too risky to take the trade, but nonetheless, the first entry that you should all be holding should go for about 575 pips, or about 5.23%, right? So a really, really good risk rewards. Absolutely amazing. Really, really good. So guys, this is the Gbpjpy and the gold trades from today. Hopefully this video helps. It's kind of the same concept. We're looking for market structure, identifying the higher highs and higher lows. And what we're saying to ourselves as well is, on the higher time frame, if we can see the markets just broke a low, and let's say that this is the 4-hour time frame, right? So we have the 4-hour time frame right here. This is the 4-hour time frame. If we know that this pullback here on the 4-hour time frame needs to happen, right? So this pullback here, then we know that if on the, let's say, lower time frames like the 15-minute, right, we're gonna have a move up, we can then start to look for buys on the way up, right? So we can start to look for these buys using a kind of, scalping method on the way up. And this is pretty much what we've done. So sooner or later, just exactly like Gbpjpy, we'll start to look for our sell setups at this zone around 161. So I do believe the market is going to continue up into there, right? So guys, hopefully this video helps. Thank you for watching. I'll see you in the next one.